Hi, I'm Robert Glazer from Wright Chartered Accountants, and I'd like to welcome risk reduction expert Jason Cobine from Cobine Carmelson. Hi Jason.
Hi Robert.
Why don't you start by telling us what made you set up your business in the first place?
Well, I've been in the industry for over 20 years. What I found was, no matter where I worked or who I worked with, that they seem to have this attitude that people purchase something and the after-sales service wasn't great.
Right.
So I just kept coming into conversations with clients who were saying, well, we're not happy with the way our claims have been settled and people don't seem to be there to respond to my queries when I call back.
Yeah.
And I felt that wasn't good enough. It just wasn't enough customer service out there. So we set up to provide a higher level of customer service than was currently available.
So you saw that gap in the market?
Yeah. We've bumped into people since who said, we got so used to bad service, we thought it was the norm. So that's where we pick up the introductions.
So is that the key thing that you offer that others don't? Or are there other things that you offer that others don't?
Well, the service gives them an indication that when they do need us, we are actually going to be there. So we're not there to provide some quotations, some documentation, and then they have to call someone else to get the actual benefit of what they paid for. Yeah. So we build that into our customer service, and therefore the one other thing that we do that we're not certain anyone else does, even though they say they do, is we handle every claim that they have through to its conclusion. We don't ask a third party. Right. We don't have an outsourced claims department. Right. We handle them personally and individually. So the client deals with the same person all the time, even when things go wrong. Yeah. And we feel it's our responsibility to actually get them their money back, get them the return on the investment they made.
Okay, that sounds good. So does that mean that you take care of all that small print? Because people, customers, I don't know what you want to call them, they get very angry about the small print in policies, don't they?
Yeah. The number one complaint we receive from people who are introduced to us, because most of our clients are, is I'm really angry because I bought this in good faith. Yeah. Some of them have had it in place for years. Yeah. And it's only when something went wrong that a technicality was brought up to try and avoid paying them. Yeah. And they weren't aware of the small print. It wasn't explained to them. Yeah. The documents weren't clear. And the number one thing people hate is buying something that looks good, looks like the right thing, but when they test it, it turns out not to be right.
So is it more that it hasn't been explained to them rather than they haven't bothered looking?
Well, let's be factual about this. Yeah. How many people realistically will get an insurance document and read it? I mean,
I bypass mine to my wife.
But your wife may not read it.
That's true.
So I go from the understanding that no one reads their insurance documents, and therefore I have to explain everything that's pertinent to them in the language that they understand. Right. And yes, it's not easy because you have to interpret the jargon. Some of the terms and conditions are very ambiguous. Yeah. But we find by making things clear, when we tell people what isn't insured, they thank us for telling them that. Yeah. Because then they can do something about it.
They become aware.
That's why we're in risk reduction. Because by telling them what they haven't got, they can then manage the process of getting it elsewhere or reduce the risk in the business altogether.
Okay. And how do you deal with things like online trading, which is sort of new trades and people that want to go on trade online? It must be a very different animal to what you're historically used to.
Yeah. We use the same. We have a process that we follow that enables us to help a company work out, well, what are your assets? Yeah. You know, what is it that you own in a business? Yeah. Now, online businesses, they don't always have big fancy offices, they don't always have lots of staff. Sure. Their assets are intangibles, and we love talking to them because they've been talking to people over the last few years who try and sell them a shop insurance or tell them they're a retailer. You know, but there are special policies out there for people to trade online.
Is that to protect their website or their brand or their patent or their copyright? Or
all those things can be protected. It depends what's important. So we see the website as an asset. Yeah. It's intangible because you can't touch it, but it still costs something to produce and it costs something to repair. Sure. Copyright is more about intellectual property. Yeah. We can protect the brand because they can be damaged by people copying the website. Right. We can protect the income streams generated from websites because if someone hacks in or takes the website down, you can stop making money if you are actually trading. So they're different. Same principles apply. We work out what are the assets, and then we work it from there.
Yeah. Okay. And people in business, I mean directors, for example, I think usually, or more often than not, recognise that limited liability gives them some protection, but I guess it doesn't give them full protection from your perspective.
Well, what we hear from directors quite a lot is, I have a limited liability company, and therefore if something goes wrong, I'll close it, pack up and go home.
Yeah.
But they don't realise that the shareholders are very well protected by a limited liability structure. Yeah. And that makes sense because the shareholders have no way of organising or controlling what the business does.
Sure.
But the directors are personally liable.
Right.
So if things go wrong, tribunals, big debts, issues where someone's intellectual property has been infringed, if someone had caused a real problem in my business and then they closed their company down, I wouldn't necessarily leave it at that. And I speak to lots of solicitors and they tell me when something goes wrong and a business closes down, they simply follow the money. So directors need to be aware that a limited liability structure does give them a little bit of protection, but it's more about protecting the shareholders. Right. So they're still personally liable.
So they should have some protection.
They should assess whether they need any.
Right.
Sometimes having a good suite of insurance policies in place is enough, and sometimes it won't cover some of the key risks to their business. Right. So it's worth assessing what are the risks to the directors as well as the business as an entity. So,
and if a business does have financial issues, does it have ramifications for their protection?
Well, business isn't easy. So some businesses have had financial troubles in the past. Some directors have been in businesses that have had financial issues in the past. They could have gone into voluntary liquidation, creditors could have put them into liquidation. All sorts of things could have happened. Now they often make the mistake of not disclosing these issues, this information historically to underwriters because they feel, well, the insurance is going to cost more if I tell them about my history, or maybe if I told them about my history, I won't get insurance. That's the biggest risk because insurance companies, it's written into every policy that all things have to be placed in.
Disclosed.
Yeah, you have to disclose it. And non-disclosure is the biggest problem in our industry. But there's this myth that insurance will increase if you tell people the truth, or it will increase the rates if you have had claims, but that's car insurance. It's not commercial insurance. It doesn't follow.
And does non-disclosure automatically null and void contracts, or does it just put them at risk?
Automatically null and void. It puts the control of the claims settlement back in the hand of the insurance company, and you want a nice, even discussion. This is how much we want, and this is how much we're insured for.
Okay, I think this leads on to my next question, actually, which is to do with how do companies protect themselves from rate increases or making sure they get cover?
Good question, and one that I was asked this morning by a charity client. Now, what their concern was is they use subcontractors. So they have people that come in and deliver some work for them. And they were saying, well, what if they cause a problem and the charity gets the blame? So we recommend they do some due diligence on their subcontractors, perhaps check that they have cover. Because if a subcontractor comes in, makes a bit of a mess, not that they want to, it could be an innocent mistake, you end up holding the baby and having to make a claim on your insurance. And if that happens 2 or 3 times, then yes, there's going to be fewer insurance companies who want to take you on. So long term, it can have an impact if you don't manage your risks and at least assess the trends. But certainly check subcontractors, check they're credible, check they have insurance. Because if they've made a mistake, it's only fair that they pay for it.
One thing companies need to do to protect themselves is to be aware of the risks and manage them. And I guess quite often they're not aware, and they actually need to talk to someone like you to make them aware.
One of the things we hear most often is, it doesn't matter, they're a subcontractor. And that's fantastic that people now use. A lot more subcontractors use in business because of tax efficiencies and other reasons. But you are responsible for their behaviour. If they're wearing the emblem of your company, or you send them to a client and the client thinks they're part of your mix, then the client's going to take action against you. They're not going to take action against an individual that they may never have really known or only saw once, they will take action against the company. So you're right. Assess what the risks are, and you don't have to do anything about them. Knowing about them is the number one thing, and then you can make an informed decision. Do I need to do anything here, or is the subcontractor accepting their own risk?
Okay, so to be effective, you yourself, in your role, have to really get to know your clients and how they operate and find out the risk. Did you do annual assessments or diagnostics?
Yeah. Typically, when we first speak to someone, it's normally just an informal conversation to see if they've got an issue that we can help with. But then we start working out whether we need to meet them, whether we need to have more detailed conversations. Sometimes we need to visit them at their premises. Sometimes we need to look at their online presence. Sometimes we need to sign NDAs before we can look at their patents.
Sure.
We need to get into the detail of the company. If we can find out what their assets are, how they make their money, and what issues will affect their reputation, then we're halfway there. But then regular contact, quarterly calls, half annual reviews, annual reviews, all these things help us keep in touch. Because when things change, the planning needs to change as well.
You must see some horrendous gaps in people's awareness of risk and their protection. Yeah,
what we find is a lot of, especially in this climate, people are saying we want to cut our premiums. Now you can certainly cut any premium if you take out some of the cover. So over a period of years, some people have moved their insurance from one advisor to another, not realising what bits they're removing. So we've gone to visit people who have no cover for hiring alternative premises. If there was a flood, air conditioning leaks, something beyond your control, you probably want to work somewhere else for a short period of time. And they didn't have any of that in there, despite having 60 staff. So can you imagine how much it would cost to find a serviced office for 50 staff or for 60 staff when you've got other things to worry about? And that wasn't covered. And it just had been removed over a period of 3 years.
Wow.
So there's some gaps.
And quite often companies don't report something going wrong when they should do. When ideally should they be making reports to their insurance companies?
Not necessarily their insurance company, because they should advise their insurance advisor.
Okay, they should report to you.
We tell people, look, tell us everything, and we tell the insurance companies what is material. Because there's no point telling insurance companies, there's no point telling one insurance company about an issue when it's only material to the other insurance company. So tell us everything, then we can advise. We do all the reporting anyway. Insurance companies sometimes give people a hard time when they make a report. I don't think they really mean it. I don't think the chief executive of that insurance company is telling his staff make their life difficult. But there are various types of training out there, and some people seem to have a bad day and think it's their job to say no. So we manage all the reporting, and therefore the clients don't get that horrible feeling that, oh, I feel bad because I've made a report of a claim, which if you've paid your money, you should be.
Going back to IT and the internet, what can, when web designers are building sites for their clients, what can they do to protect from losses and hacking, and what should they be looking out for?
Well, web designers give people a finished website, and some of these websites have got user-generated content on it, and some of them have what we call content management systems, and that means there's access to that website. The first thing they should do is make sure the client understands that the codes, the security features, they really use great security. Passwords, password 01 doesn't work anymore, but a combination of the most up-to-date password protocol is really important to stop people getting in. But the other thing is, explain to clients that whilst websites are brilliant and they work very well, they're not always going to stay up on the internet forever. There's denial of service attacks, there's criminals out there, cyber criminals who are just out to steal anything they can get. They're not looking for Marks and Spencer's website. They're just searching the internet, looking for open backdoors with weak passwords, or where you've allowed people to generate content for you. And they get in, and then they start creating havoc. Sometimes you wouldn't even know they've been in.
What's their objective?
They're thieves.
But what do they steal? Data?
They steal client data.
Yeah.
So Sony, they got hacked. It was a gaming platform,
Yeah.
and it was a subscription-based model.
Yeah.
And the hackers got in the back and they stole loads of credit card details,
Right.
and then went on a spree. So they cloned the cards,
Yeah.
and they spent other people's money.
Okay.
So that, to me, that's a really bad risk. You know, it's a reputation risk. You know, you're not going to sign up to Sony if you've just heard that they've allowed people to get your credit card details.
Sure.
So they're usually after that, but sometimes it can be commercial espionage. They could be after your intellectual property.
Yeah.
It could be a competitor trying to make you look bad.
Yeah.
We've all heard about these emails that have been going backwards and forwards between newspapers and politicians. Well, there are businesses whose employees are saying silly things in emails. Norwich Union, they got fined £600,000 because one of their sales staff said the wrong thing about a competitor on a notice board. So even insurance companies are making these mistakes.
I heard of a case where an employee of a company tweeted in his own time at night something vaguely offensive to an employee of another company, and the director of that company started threatening.
Social media, it's an interesting area.
Yeah.
We had a client who wanted to generate some interest in their service by doing a blog listing the worst 10 offenders of the thing that they sell. Yeah. And 2 days after they issued the blog, they got a letter from an in-house solicitor at this massive corporate saying, thank you for publicising our name as the #1 offender. Yeah. Where did you get your information? Yeah. Have you got any backup? And they were going to take action against them for, I'll get this wrong, it's either defamation or libel, but you know, it was written, it was in written form, it was up there for the public to see, and they had to take it down. Yeah. Now, whether they'd taken it down or not, they could have still got sued because they could have alleged some form of damage to their reputation. They could have alleged that there was a financial loss. Now, they may never have proved the damage to reputation or financial loss, but it costs money to defend yourself.
Sure. Do you get involved in advising companies and businesses on their social media policy and how to protect themselves?
The first thing we do is, if they are on social media, is to have a social media policy as part of either the company protocol or the employment contract. Because you can tell your employees 100 times a day, don't go on Facebook, don't say this on Twitter, don't do that on LinkedIn. Sure. But they're more likely to take notice if they've read it and signed a document saying, I agree to these things. Right. At least then you have a defence. Yeah. Now, a judge may rule your management of the policy wasn't great because you only told them once or you never repeated it, but it's a form of defence. It's saying, well, we're aware of this risk, we told them not to, and they did. Yeah. And you, even with health and safety, you can tell people wear a high visibility jacket 20 times. If they don't, you would say it's their problem. Yeah. Well, it becomes your problem if you haven't got it in writing.
And if I'm having a website designed for me, how do I know the website designer is building in the right level of security? How do I get it?
You should ask. It's, you know, design is fantastic because things can look great, but what do you want your website to do? If you want it to attract interest, or even take orders, then it's got to be robust. It's got to stay up. So the first thing to do is just talk to your web designer about, well, how secure is it? Sure. What do I have to do to keep it secure? Now, if someone is really, really determined, they're going to get in anyway. You know, even GCHQ have people who get in. Sure. The Chinese government have people who are getting in. But those are really determined, typically politically motivated groups or groups of hackers. Right. The low-hanging fruit, your website and my website, they're just by people who are ambling around and getting in because of weak passwords. So at least ask the web designer, what can I do to keep people out? Is this password going to do the job? And the answer is never going to be yes 100%, but if you can get to 99%, you're doing more than everyone else. Then you won't be targeted. So if they get to your website and it's secure, they'll just go to the one next to the line. A bit like properties. People will break into a property if the window's open. If you haven't left your windows open, they'll go to someone else's.
Okay. One final question, Jason. As a chartered accountant, What do you think I should be doing to make sure my clients are protected in the right way?
Well, chartered accountants are a regulated industry, much like myself, so you would already have things in place.
Yeah.
You'll have your indemnities in place,
Sure.
which are part of actually your profession.
Yeah.
But I would say you've got assets. You've got a wonderful asset here.
Yeah.
So you can make sure that this asset is well protected.
Yeah.
We check people have the right amount of cover.
Yeah.
We also check if something does go wrong where you are, have you got enough in the insurance kitty to find another premises locally, because you don't want to be going too far. And also if it's for clients, just ask your clients, have you had a review?
Yeah.
You know, a review is a great way to find out if something is still working.
Yeah.
So in your world, you probably review people's accounts at least once a year, and it's good to do that with insurance provision and risk management planning as well.
And that's a service that you can provide.
We give a 1 hour free review to anyone that's introduced to us. That's not immediate. We have a short conversation on the phone.
Yeah.
But if we feel that there's something we can do for them,
Right.
we'll give them some tips,
Right.
but also schedule a time to actually complete the review.
Right.
8 out of 10 people that undertake the review go on to appoint us.
Yeah.
So we're not doing it because we're a charity.
Sure.
We're doing it because we feel that we offer a unique service that can help businesses, and it makes sense to give them the opportunity.
That's win-win, isn't it?
Yeah. Well, if they have a problem we can solve, then we're happy to help.
Yeah.
And if they think we have a solution to an issue, then they want help.
Sure.
So it makes sense.
Great. Thank you very much.
Thank you.